Welcome. We're here with Yuko Tsuchida from Hito LLC. Today we're talking about tax credits and incentives specifically for Illinois businesses. Thanks for joining us, Yuko.
Thank you, Paul, for having me.
Yeah, it's fun to see you again and run through these. For those of you guys that missed these, we go through state by state and talk about ways that business owners, startups, established businesses, manufacturing, aerospace, tech, all of these sorts of industries can maximize the most savings, the most incentives, recoup and gain a lot more growth trajectory from taking advantage of tax credits that are available to you. And so today specifically, we're going through tax credits for Illinois businesses. And obviously, there are a lot of these that just apply to every state at the federal level. And so we'll talk about those. But then there's a lot of unique programs that are available just to Illinois businesses. So pay attention. If there's something here that sparks your interest, chances are there's a program that's either similar in a different state. Maybe the incentives are a little bit different. But we're going to go through and focus specifically on Illinois. Am I getting all of that right, Yuko?
Yes.
Love it.
Sounds
okay.
Perfect.
So I know that Hito focuses a lot on R&D. I'm assuming that's the first place to start. Let's talk about the R&D tax credits for Illinois businesses.
Sure. So R&D tax credit is available on the federal level and state level. Like Illinois is one of the state, provide the R&D tax credits. The Illinois code, piggyback off, federal. So, if you qualify at the federal level, you're probably going to qualify at the Illinois state level. The tax credit is about 6.5% of qualified research expenses.
I see. And if you don't get to use that all in 1 year, I'm assuming this carries forward. Is that right?
Correct. It carries over up to 5 years.
Oh, wow. Okay.
Yeah.
So this feels like a very large credit. How do you qualify for an R&D tax credit?
Yeah, so R&D tax credit, it was enacted back in 1980s, and federal government and state government, generally, kept it very broad, saying that any companies who are developing or improving product or process, they may qualify. And you have to meet 4-part test, and we can go into that. But a lot of companies who are innovating for your company or improving your process or product, they should qualify for this credits.
So I love what you said there. Improving or developing products, processes, software, prototypes. Mm-hmm. What kind of businesses are these? This is definitely not service-based marketing agencies, right?
Yeah, look, typically an accounting firm or financial firm or service firm doesn't qualify unless they are actually developing software or product. So one of the tests, so 4-part test, one of the tests is they have to be using the hard science. Whenever we say hard science, it could be computer science, engineering, biology to develop those product or process. So if the software is underlining R&D, the product you're developing, they may qualify for R&D. But if they're just developing marketing strategy, that does not qualify.
Great. What are the typical big buckets of industries or businesses that do qualify? Tech,
software, civil engineering, any type of engineering, manufacturing, pharma, we have a couple of pharma tech, pharmaceutical companies. I think we talked about biotech, medical device, anything around those, hard science companies.
And these tax credits are not insignificant. They're pretty big, right? They immediately go to reducing your corporate income tax liability, or, tell me, how much money are we talking about? How much impact does something like an R&D tax credit typically make?
Yeah, so typically, I always talk about federal and state together. So let's say, you have, 10 engineers who are working on, developing software, and each one person is getting, $150K. So that's, 1.5 million, potential expenses. And let's say there are about 80% of their time is spent, or 70% of their spend on the research and development area. So 70% of 1.5 is about $1 million, right?
Sure,
and I will say back of the envelope calculation, the 10% would be qualifying as R&D credit. So in that scenario, about 100K of tax credits will be available in both federal and Illinois together.
So if you owed $100,000 in your tax estimates, that's a wash. You get that back, and you can use that $100,000 to keep growing your business and developing more competitive advantage. And obviously this scales the bigger the organization gets. Is there a minimum sort of, how big of a company do you have to be to make this make sense?
We have clients who has 5 employees to 60 employees who are in the R&D. So the size doesn't really matter. And also on the federal side, if they're not they're taxable yet, but if they're first 5 years of their business and qualify for small business election, they could use these tax credit against payroll tax as well if they don't have income tax.
That's really big. I love that. Okay, so this goes against payroll tax too, another big reason to keep diving in. Now, I'm assuming since this is both at the federal level and at the state level, doesn't count for remote employees. They have to be in Illinois. Is that correct?
Yeah, so federal, they may qualify, right, if they are in the United States, but Illinois R&D tax credit, the activity itself needs to be taken in Illinois. But remember, about 40 states offer R&D tax credit. So if remote workers are let's say in California and companies are paying California taxes, we will help compute California tax as well, tax credits.
Oh, got it. So you just go state by state, figure out all the credits that are available. You'll grab each employee in every state and apply those. I love that. Yep. Okay, you do all the heavy lifting. So R&D, obviously the biggest one that we start off talking about first, especially since it has a federal component to it and then it gets broken down state by state. Let's talk about some Illinois specific credits. I know Illinois has the EDGE tax credit. Would you tell us more about that one?
Sure. So EDGE credit is available for small to large companies. Some of the requirement, as small as adding 5 people for less than 100 employee companies. And if this is competitive, so you have to apply for it. However, if you get into the program, about 50% of the payroll taxes they withheld for your employees, that could be refunded to a company for bringing the job to Illinois.
That's really cool. And I know that there's even a component for underserved areas where it increases that even more. How much more does it increase it to?
I think maybe 75%.
So you move from 50% to 75%. That's huge of their payroll taxes to bring more work to Illinois. That's amazing. So if you have a project and you're bringing it there, I'm assuming, my understanding that there's some eligibility factors for how many new jobs you're creating or whatever that is. And then are there any other sort of factors that you're considering?
Yeah, so a less than 100 employee company, meaning 100 not just in California, but not
Total?
in Illinois, but entire world. They don't have capital investment requirement, but if your company entire headcount is more than 100 employees, you have to also invest 2.5 million in addition to creating new jobs. So there's
Which if you were opening an
tiers.
office or doing something significant, that makes perfect sense.
Yeah.
Okay, that's great. And a lot of states offer these sort of employment opportunity credits. Yeah. How about the Enterprise Zone program?
So Enterprise Zone program, this is you have to create minimum 200 full-time employee and invest $5 million in capex, qualified properties. So this is towards more larger companies. But if you're in those designated Enterprise Zone, you could get sales tax exemption, investment and job tax credits, which would be significant, utility tax exemption, property tax abatement, so there's a lot of opportunities. So if you're thinking about moving into Illinois and bringing significant amount of capital expenditure or full-time employee, you may want to look into locating in the enterprise zone area.
Oh, that's great. So this is a bigger investment. You have to pre-register for this. This is a massive sort of undertaking. But if you choose to do it in an enterprise zone, and you register this opportunity with the enterprise zone, there's significant tax savings that you could get. Everything from sales tax exemptions to utility taxes to tax credits against your state income tax. I mean, this seems very, very significant.
Definitely.
I love that. Okay. High impact business program. Tell me more about the high impact business program.
Yeah, so this is competitive too. So like you have to ask for you have to apply for this. So this is one of the large scale investments. So they are looking at creating 500 full-time job with minimum $12 million in capital expenditure. Or you could if you're already existing in Illinois, if you're retaining 1,500 full-time job with the 30 million capital expenditure, they may qualify for tax credits. So tax credit look like 0.5% of investment tax credits against Illinois income tax or sales tax exemption. And special exemption in renewable energy or solar and energy stuff like that. But as I said, this is competitive program and you have to apply and you get pre-approval from the state.
Got it. And these seem to be this one isn't industry sector specific, but can these stack? Can you do a high impact business program and an enterprise zone program and overlay those two credits together?
Yeah, so this is negotiation, right? So typically yes, but we need to coordinate with the Illinois and economic development whenever we are negotiating to say, okay, what credit we're gonna take and what we're gonna let go. So typically I will say yes.
I see. Okay. Now let's go state by or sector by sector. You also have the Manufacturing Illinois Chips for Real Opportunity Act called MICRO. They're so clever with their naming conventions. Basically, this is for semiconductors, microchips, quantum computing manufacturers, R&D companies, and this is a different tax credit, dollar for dollar, right? This is another fairly big one. What's the cap on this one or the investment requirement?
So the investment requirement, the smallest is $2.5 million capital expenditure plus 50 new jobs. And this program came out from CHIP Act, Federal CHIP Act, and federal is funding some of the state CHIP activities.
And so you qualify at both levels, the federal and the state level, or it's just dispersed at the state level?
Depends. So if you have for federal side, there is still the CHIP Act is negotiation, application is almost done. However, the state side is still open. So CHIP Act, I have a couple clients we helped negotiating, but that has been large scale and small scale CHIP Act was already completed. So I think a majority of the people are in the final stage of getting dispersed. But state side, specifically Illinois, their opportunity is still open at this moment.
I see. Okay. Well, and then this one is a big one. It removes your income tax liability dollar for dollar. That's a pretty big one. The next one is moving out of chips and semiconductors and all of that into the REV Act, which is reimagining energy in vehicles. And so this is for EV manufacturing, battery production, clean energy, or EV supply chain. What's the minimum here for a capital investment? And then what are the incentives on this program?
Yeah, so this one is minimum $20 million capital investment and they have to create 50 plus new full-time job within the 4 years. And then if you qualify and if you get approved, you can save up to 75% of new jobs, payroll withholding taxes to refund it to you.
Oh, wow.
And if you're in an underserved area, they may approve up to 100%. So this is up to 100% or up to 75%. So this comes into negotiation with the state.
And my understanding is it also fills in for training grants to train employees that are in these specific areas to upskill their workforce. It seems very significant in terms of trying to get people to move into some of these zones. Makes sense. We're trying to bring chips back. We're trying to increase our clean, alternative fuels and electric vehicles. And so now the other one is the data center investment program, another significant industry, massive growth happening. Tell us about the data center investment program credit.
Sure. So this is like supporting data center development, like, construction itself, right? So they're
So not the
requiring like
employees, just building it out.
building out plus like, they're asking like, to create new job as well. So like, their requirement is like 250 million like investment over 5 years, plus at least 20 high wage job over 60-month period. So unless like you meet both of them,
see.
they are not
Two.
gonna like incentivize. So this gonna be like, another large data center project.
So it has to be in the right zone, right? It's giving you 20% of the wages paid to construction workers in underserved areas. That's significant to get a 20% break on the construction of a data center. And you also have to hire 20 plus high paid wage jobs in that 5-year period. What else needs to be met?
And then so this is like, another like pre-application, but like, after you get approved and you start hiring, there is an annual like, reporting requirement at like May 31st every single year. And so one of the like, incentive is like, long-term like tax relief for like 20 years. And like 5-year, and that comes with like 5-year like renewal, like just to meet like all the compliance and like tax credit like requirement.
So you get these credits for 20 years at 5-year renewal contingencies. That's incredible. So this isn't just a short-term build the data center, hire the team. This is a 20-year tax exemption. Wow. That's amazing. This one's probably more accessible to smaller companies. Let's talk about the apprenticeship tax credit. Trades, manufacturing, IT, and other industries that require training new workers. Tell me more about apprenticeship and hiring. What kind of incentives the state of Illinois is giving?
Yeah, so training tax credits or like apprenticeship tax credit is often like, overlooked in the state level. Like, majority of states have this, and like Illinois is like really good, right? And like, eligibility is like, they must be trainee or apprentice. They need to be Illinois resident. They have to be at least like, 16 years old. And then like, they have to be employed by like, taxpayer. If you meet like, qualification, like, they can get up to like, credit of like $3,500 per apprentice, or like, if you're in an underserved community, like, there is a bonus of $1,500 credit to cover like, their training or educational cost.
So you could get up to $5,000 per apprentice if you're in an underserved area. That's significant, especially for larger companies. This is great. That's amazing.
So
okay.
I think like apprenticeship, like, tax credits and like each program, like, that could be used by smaller entities. Like, others are like a little bit like, targeted more like large investment.
I see. Yeah. Some of those big ones are big ones, right? You have to,
Yeah.
If you're going to build a data center, you're building a data center. If you're going to manufacturing microchips is no small endeavor, but getting some of, hiring apprentices and doing some of this other, especially R&D, a lot of smaller businesses are doing those things and don't realize that they qualify. And I think that is part of the lesson, that a lot of Illinois businesses should care about this. It's immediate tax savings. This reduces your income tax liability directly, dollar for dollar, usually. There's cash flow relief. Like, even if you've paid some of these things, you can get a refund or you can carry it forward into future tax payments. And so this allows for more job growth, more capital investment, more innovation, more workforce development. And the crazy thing is many people that aren't taking advantage of this don't realize that their competitors are looking and doing some of these things. It's going to give them a competitive advantage if they just ask the right questions and say, do I qualify or not? Like, just getting that answer is incredibly, incredibly important. Let's talk about what, for businesses that want to go after these tax credits, especially in we can probably talk about, we'll save a little time and talk about this big, beautiful tax bill as well. But what should businesses know? If you're going after these in 2025 and you don't know if you qualify or not, what would you say to a business like that?
I think like number one, like, you have to talk to your CPA, but like, like I think like, similar to doctors, right? Like the CPA is a generalist, and we like, us like, Hito, we are like specialists. So like, talk to your CPA first and like, what they're doing for you. But like, ask specific question. Hey, I am doing these type of like activities. Like for example, I'm training these people, like, how many employees and how many like average hours, right? Is there anything like out there? Or hey, I am creating this like new software, or we are developing product, like, have you look at R&D? So I think like starting point is like, talking to your CPAs, but like, if you don't know, and like if you're not sure, like, they're looking at those opportunities, like, reach out to us, or like, reach out to like, people like us, like who specialize tax credit, tax incentive area, because this is a like, very specialized area. CPA typically look back, we look
Yeah.
forward, right?
Right.
So we are always like, listening to like what companies are doing, and like, coming up with, okay, can they qualify? And like a lot of like credits like these, like other than like, R&D tax credit and like, smaller number of like tax credit program, we have to actually go negotiate or like apply for like, credit before you make investment, right? So if you already hire somebody, or if you already start training somebody, that may not qualify, but how can we get in front of the investment?
Such an important thing to be proactive in that, because you have to apply as you're describing it before you actually do the activity. So if you're going to hire a large workforce and start a large project or start a capital investment, you actually have to do the application and negotiate that before you actually start. Am I hearing that correctly?
Yeah, definitely.
That's super interesting. That just little twist there that you gave there is so interesting. Our accountants typically are looking backwards to see what you qualify, whereas the tax credit and the planning system actually be proactive ahead of the activity as opposed to reactive. That's super important.
Yeah, so just to give you like a example, like Paul, like, right now we are talking to a green manufacturer. They're thinking about like, expanding into either Texas, Nevada, or California. The expansion probably not gonna happen like 2 more years, but like, we are starting the research, and negotiation will probably happen in like, 3 to 6 months from now.
That's amazing. And this is the negotiation part that happens with the state and the federal level ends up being significant in terms of recouping a lot of these tax credits and generating some competitive advantage by just using programs that are already out there to incentivize this growth that you're doing. I love that.
And historically, state side was like, always you could look back those credits, but like, nowadays, like the last 10 years, state is getting smarter, right? And they want to attract the actual like jobs or like investment that may not happen in that particular state. So they're shifting towards like pre-approval or like negotiation. So like, it's changing, like, the credit world is changing every day too.
And so this is worth a specialized conversation with somebody that just does this, like Hito. I know this is a little bit of the soft sell, but the idea that somebody that can actually pull some of this out of there, out of the business owner, just because they don't realize that this is on the table, they don't realize that they qualify. And so just being careful with those assumptions on what do I qualify, what I'm not, am I high tech enough? Am I big enough? Are we manufacturing enough? A lot of that we're leaving hundreds, if not millions of dollars on the table from a significant project because we just assume we're going to move fast and have this dialogue internally without talking to a specialist. Let's, without getting political, right? The whole idea of what is happening politically right now with tariffs and tax bills is to encourage further growth at the business level within the United States as opposed to pushing it beyond our borders. And so let's spend a little bit of time talking about the current sort of tax bill that's on the table, the big, beautiful tax bill. I'd love to hear your perspective on this.
Yeah, I will focus on R&D tax credit because I don't want to go into like political conversation.
No, you don't want to give me more your take on Elon Musk? No? Okay.
No.
We'll just stay on taxes. Sounds good. Great.
So in one big, beautiful bill that has passed the House and it's in the Senate. And 174 changes in there. So what is it, 174, right? Section 174. Prior to 2022, if you have a research and development expense, let's say $1 million, that could be deducted the same year like you incurred. In addition to that, you could get like, R&D tax credit. So that was like R&D tax credit was like, significant for like a lot of companies.
Double whammy all in 1 year.
Yeah. And 2022 comes, the Congress said like, hey, businesses if you're doing like research and development, you need to capitalize it and amortize over 5 years if it's domestic, and like 15 years it's a falling like research and development. So you couldn't deduct that $1 million the same year, right? So typically like 20% of that, so like 200K would be deducted, but $800,000 was like capitalized, meaning you are increasing like tax liability for like 800,000. And you could like take the R&D tax credit, but there was significant tax increase in like first like 3 to 4 years. So this one big beautiful bill, they're trying to suspend that from 2025 to 2029. So if we can like revert back to like hey, R&D tax credit, like we can like R&D tax expense, if we can like deduct it the same year, and like also like take R&D tax credit, even like just 2025 through 2028, company has like 5 years to like plan for what's come to like 2030 and above. So I think it will be like beneficial for company to revisit R&D tax credit or like research and development who shied away from that during like since 2022.
Interesting. Yeah. So I'm assuming that's going to create a lot more incentive to do more R&D and investment and to dive into a local workforce, because it only applies in where the research and development is done, correct?
Correct.
So that's a lot of money on the table. It's the same. There's a lot of sort of business incentives that are like this that are being packaged up that hopefully drive a lot more innovation and investment here within our borders. That's very interesting. Do you think it'll get passed?
Let's hope so.
I love it. Okay.
Yeah.
Well, let's put a pretty bow on this. If you're in Illinois, if you're a business owner that's looking to take advantage of some of these tax credits, if you're looking to expand, hire new employees, there are significant programs on the table that can be negotiated. Obviously, you need to be proactive and get ahead of them. A lot of them you need to apply first before you make that investment. And don't be sitting at the end of the year looking at your tax bill going, I wish I did this earlier. This is the right time to do it, especially when you feel the sting of all the taxes you just paid back here in April. So we're not too far away from experiencing that pain and stepping forward into making next year look a lot better and cleaner and drive your growth and drive your innovation, gain competitive advantage. Yuko, thanks again for sharing a lot of your expertise and knowledge. And hopefully we get to dive into another state soon.
Sounds good. Thank you, Paul.
Thank you. Talk soon.